And hello, everyone. Thank you and welcome to Strategic Trading Services' very first live broadcast. I'm Brian Swan, founder and creator of Strategic Trading Service, and I want to thank you for tuning in. So, with you, I'm kind of new with this, so guys, bear with me. And what we're going to do is run down the basic concept of what we do here and why I'm even in this business. Real quick background about me. I got into trading some years ago, about 2010. Past several years, I have worked my butt off learning everything that there was to know about this business. And I'm learning every day, but I have been able to make a living doing this for the past several years. Fairly confident that once you have a look at what I have to offer, that you will see the sound strategy behind what we're doing. And the reason that I named my business Strategic Trading Service is because we look at money more so than indicators and numbers, things like that. We look at basic principles. And what really did it for me was one of the things this gentleman here said. And he said if a speculator is correct half of the time, average, even being right 3 or 4 times out of 10, should yield a person a fortune if he has the sense to cut his losses quickly on the ventures where he is wrong. I cannot begin to tell you how correct this is. That statement in itself is uh, phenomenal because, yes, if you can make 3 out of 4 times out of 10, you can make a lot of money. And using the truth behind the strategy is what's important. And the strategy that we use, if I can get this up right, okay, here we go. There are different types of strategy. Strategy is a plan, course of action to achieve an intended set of goals. We do this. Strategy as a pattern, a consistent pattern of past behavior with a strategy realized over time rather than planned or intended. That means as you go along, you find new things and you discover new things and you intend to go out the next time looking for that intent. That's what happened in the learning curve. Strategy as a position, locating brands, products, companies within the market based on the conceptual framework of consumers or other stakeholders. A strategy determined primarily by factors outside the firm. This is the case for us because we use Nadex contracts as our assets, but we'll get to that in a minute. Strategy is a ploy, a specific maneuver intended to outwit a competitor. Well, if you're trading, you better believe you're out here to outwit your competitors, and I'm going to help you do just that. And strategy as perspective. Executing a strategy based on business or a natural extension of the mindset or ideological perspectives of the organization. We do this because this is the entire foundation of our business. We're looking at a way to make money no matter what the market does. And that's what I believe we have to offer here. Um, One of the things that we do here, my business model, okay, and this is a little quick thing, says thank you for looking at it and tells you who I am. Over the past 6 years, I've worked on this, and the past 3 years in practical application in parts. And I kept the parts that work and integrated them into the system, and the parts that haven't worked, we got rid of them. And that's why this system is phenomenal. The first thing that you have to understand is that directional trading is speculation. We here at Strategic, we act more like a production facility or a mining operation. I also like to think of it as an insurance company. When you are speculating, you are looking at whether it's going to go up or down, and everything that you have, all of your efforts are directed towards that. Is the price going to fall? Is the price going to rise? And in the end, you're only going to be, you only have a 50-50 chance. Okay. And the principles of, excuse me, using the principles of price, eventually you're going to end up with half one way, half the other. And that's just the way that it goes. Non-directional trading is extraction. Okay. When you trade in a directionally neutral fashion, the question isn't how much money or whether there is profit to be made. Okay. The question is, can you extract more profit than it costs you to make? All right. Because when you go into a situation like you have right here, which is the iron butterfly, is going to be the basic principle of everything that we do here. When you buy above in the money and you sell below in the money, excuse me, when you sell below in the money, you buy above in the money contracts, positions that are both starting in the money, okay, top and bottom. So now, if you can keep that ratio, all right, which is called dynamic hedging, if you can keep that ratio track, you will make money, and that is what we do. Because if you buy it up, you're selling down, there's no telling what's going to happen. But in the middle, you got money every single time. You make this happen. And once again, like I said, the iron butterfly strategy is the premier strategy that we use. And I think it is probably the most powerful concept in all of speculative retail trading. Came across it, it was almost an afterthought from the presenter, and I was totally blown away by it. And I have worked pretty much exclusively on my options theories based upon this system and how to optimize it to be its best. And I believe I've done that. Quick overview of it. Iron butterfly strategy, price is in the middle and you want to finish in the middle. Okay. And this concept alone, I'll show you later, is so powerful and it makes so much money on its own. But we have been able to optimize it to where it is almost guaranteed to make money every single time. Because with dynamic hedging, two positions are taken with a balance ratio that is continually adjusted. Now, this is applying towards stocks, but we use currency for several reasons, mainly because of the ability to have options and spot forex working together. This will allow us the adjusting that we need to make money. And you just be patient with me, guys. I will get all into it and show you what we do. One of the things that we do is, like I say, we operate as a insurance company in a way, and we purchase assets, are binary options, okay? And if you don't know what those are, which most of you do, so I'm not going to get into that, but hey, here it is, 0, 100. But there's also another thing that you have to look at. This is the strike price, 1,700, okay? If we were purchasing or buying here at this level is $50, okay? So no matter what you pay for your contract, if price reaches this level, it is $50 or in that range. So that lets you know right now you can walk away with how much you're going to lose and how much you can make. So 0 if your contract is no good, $50 at the strike price at any time during this life of the contract, and $100 at expiration. This will make you money, and lots of it, okay? Lots of it, lots of it, lots of it. And let's see here. Okay, now here's an example of some of the trades that I've taken. We have taken these trades, and this is last week actually. And you can see by letting the contracts go the entire length of expiration, we have money that has generated both from the contracts and from the insurance aspect of it. The insurance aspect of it is Forex, all right? And it basically looks like Find this on here. Uh, I have things out of whack here. Y'all got to forgive me. Like I said, this is still my new thing. Why are, okay, here we go. Yes. Now, what is insurance trading? Well, remember we started with the iron butterfly concept, right? Well, it also works in reverse. This position is known as the straddle. Now, anybody who trades Forex in any way knows what the straddle position is. In this case, if we were going for a straddle position in spot Forex, we don't know if price is going to rise, we don't know if it's going to fall. So we take an entry order above and below. If price rises or falls at this level, we will then buy or sell in the direction that price is going. While it's sitting here in the middle, nothing's happening. What if you were able to slap binary option up here selling and one below here buying while you have these entry orders? So while price is sitting here in the middle, you are making money. As time decays on those contracts, they are worth value. Now, if price does hit one or the other, yes, the value of this contract or that contract will decrease as price reaches to it. Remember, we have over here an entry order for Forex. Now, what are the numbers? How does that work exactly? Well, I've broken it down for you. Ultimately, when you go into a iron butterfly position, you want 75 and 25. You want to spend $75 on a contract. And if you look at each contract as a probability vector, that means that you have a 75% chance of success of either one of them. Price is in the middle, and let's say price goes up on us, right? Goes up and it hits our entry order. How much is our entry order for? Well, you must first determine how much you are going to be losing on your binary option. You were to spend $75 and at the strike price is $50, that means that you would lose $25. So if you can make the distance from your entry level to your strike price, which is also going to be your take profit on your Forex insurance, if you were to make that, say, okay, now you would lose 25, but make 30 at the same time. And let us not forget, at the bottom, you have another entry order that is doing nothing but appreciating as price goes away from it. So in this concept, buy our entry order up, continue up, and we close out and take profit at the same time, therefore generating either a break even or a small profit. And I like to make that a little bit more because this also includes transaction costs in here. Nadex has gone up on its stock at $9 capped, but now they're going, all out. So we have to find ways to offset that. And if you have 100 contracts out here, that's going to cost you $100. Okay, but now we have a way to action cost money back. If we were to, if this example, if it worked out exactly as we have planned here, we lost 25, we made 30, okay, and we made 25 down here. Does $4, $1 in and $1 out to put this entire position on. Therefore, that extra $5 that we just accumulated in spot Forex covers this. Now, naturally, these systems must be owned by the by the holder of the spot Forex account and a Nadex account, and they're going to be operating independent of each other, but they're also under your flag. So even though you're making money over here and you're losing money over there, together as a whole, you make a profit. And this is a beautiful, beautiful concept. And honestly, I'm surprised. I've been surprised for quite some time that no one else was able to find this, or come up with this. It is almost been unbelievable, because sometimes you have to say, am I the first person to come up with something? But hey, in this case, it looks like I am. So let me give you a quick example of how this works in real life. All right. Now, let me be clear. Right now, what we're doing, the Nadex contracts that we're using, we are using demo contracts, but it belongs to actual clients of strategic trading, and they have been profiting and benefiting from the setup and the structure of this as well. So even if you don't have Nadex contracts and you don't want to open up or you can't afford to, you can still open up a account with us and profit from the insurance side of it, because all my clients are in the same trades using our trade copy technology. So even though these are demo Nadex accounts, you can profit from this regardless. On as if we have both of them, because that's what we want to do. Now, in this position right here, we have 4 days to expiration, right? And we are looking at a take profit 37.25. Okay, so the 37.25 is where we're going to place our insurance, and we do the same thing below. We trade below because we want to have about 25 pips in this, and this is how I set this up, because I value of the contract, not just where we're going to close out at expiration. Because what if we have 4 days on this thing? Where are we going to sleep? When are we going to get some rest? So what if price, while we're not looking, got away from us and shot past this, right? Well, guess what? Because if we only have $75, on this example, so we have $78, or we'll call it $78 at risk, that's the most that we can lose, period, point blank. Well, $3.40. Oh, excuse me, that's our take, that's our stop loss, excuse me. Okay, $3.40 at $25 a pip. Okay, oh, excuse me, $3.40 or 25 pips, excuse me. $3.40 a pip or 25 pips is 80. And our target range for those 25 pips, okay, is 136, okay, and 135.75. That is our target range, is where we're going to go. Those are 25 pips, is where we're trying to get to right here. So, and that includes our stop loss as well, because you also want to have a stop loss that is set at half the value of your contract, because sometimes price will fall back down and hit our stop loss. Now, if we have it set for the entire value of that you can make on your forex, on your options, then those accounts are out. But if you have it set for half and come back again, if price does come up and it continues down, you still have made a profit on your insurance, on your options. These things, I have gone through all of the possible ways that things can happen, because when you're dealing with binary options, you only have basically 2 choices, yes or no. So it limits the range of possibilities of things that can happen. So in this case right here, we have a we have it set up, and price comes in, okay, and it hits our target, and it hits our stop, excuse me, it hits our take profit, and we have made $85 on here. We only had $78 at risk. Well, excuse me, in this case, $75 at risk, but we have made a profit on this. Now, how does it look? As time continued on, okay, as time continued on through the week, because we didn't have to close that position out now, because we've already basically covered it. So let it stay open. And as time continues on, it came back down some. All right, and you can profit in that way as well as time continues. But the beautiful thing about this is I can do this for you. I can send these orders to you. I can show you how this will work, and we can communicate pretty much how we're doing here, right? But what has happened here in this situation is price came up, it made $85 right here. We lost $75 over here, and we made $25 down here. We continued ahead, and we rolled with that. We got other contracts. We bought, as price moved up, we bought here and here and made another butterfly trade. Okay, and with an hour and 26 minutes expiration, right? We have all of our current contracts plus this $85 that we made earlier. This system allows you to make money in so many ways. Today, I just not discovered a new way, but today I basically get a profit of $43 and continue on with the same setup, just 100 pips more because we started early. We started on Sunday, getting tickets for Friday. So this system has so many ways that you can adjust it to make it work. Now, let's talk a minute about how we are going to work together, because this does require a partnership. And a trading partnership agreement is basically this, according to Investopedia. It is an agreement drawn up by two parties that have agreed to trade certain items or information to each other. The agreement outlines the terms of the trade or the trading process, such as compensation for the shorter party and inadequate trade. Trading partner agreements are often tailored for electronic transactions, which is exactly what we're doing. So basically, what we do with our money outside of the exchange is our business. We can come up with any agreement that we want to come up with. So the agreement that we're going to come up with is simply this: if you are in a trading partnership agreement with us, with strategic trading, and you take the contracts that we send to you to take instructions, those contracts, let's say this again, those contracts are then insured. If you can make $25 on this contract, you're going to make $25 on this contract. That's the loss. It is insured to make money. Okay? And how do we do that? I will show you how we do that. Is first of all, with our Forex insurance. Now, there are two basic components to our agreement. Number one is the Forex insurance is handled by me. I will set in the entry orders, the take profits, the stop orders that we need. You, on the other end, simply purchase the assets that are sent out to you, the binary options that are sent. And once you make the purchase of them from your Nadex, you're good. You're good, and The rest of the time, we do the work over here, and all you have to do is collect your money and maybe transfer from one to the other to balance things out. The broker that in this case is going to be Pax Forex. Now, I know a lot of you have other brokers and you feel strongly about them. Keep them. Continue to trade as you trade. This system can be independent of anything else that you're doing, and it does not have to interfere with your trading at all. But the reason why everyone needs to be under the same auspice is so that my trade copy technology is able to put everyone at the same time and execute simultaneously. So if you don't know about Pax Forex, I want you to take the next, it's only like 4 minutes, and here's a review of them. And this is the broker that we will use. And I find them to be one of the best brokers that I have run across. And I'm glad to have not been affiliated with them, but I think that you'll like them too. Oh, gosh. I'm horrible.
In this session, we're going to review Pax Forex. Pax Forex was founded by a team of professional traders with the help of investors. They have extensive experience in Forex, stocks, options, and CFDs markets as traders and dealers. Offers research materials and educational materials, and they provided you with the trader for the most popular platform out there is the platform which is available on Android, iOS, mobile devices as well as multi-terminal version. The account types that they offer are Cent, Mini, Standard, and VIP. And the spread starts from 0 pips in the Cent account. The Mini account starts from 0.8. In the Standard account, it starts from 0.3 pip. VIP account. In both standard and VIP accounts, you will have free one-to-one education, and the recommended deposit amount for Cent account is $100 US. For Mini account is $500 US. For Standard account is $5,000 US. And for VIP account is $50K US. In Cent account is US dollar, in Mini account and Standard as well as VIP, it's US dollars, euros, and they offer leverage up to 500 on all the account types, and you have access to gold and silver as well. That's on the maximum lot size, and VPS is $25 US per, which is free on the VIP account. On both standard and VIP accounts, you will have personal, and on Mini, standard, and VIP accounts, you will have the ability of swap-free account. To fund your account, you have the options of NetTeller, bank wire transfer, credit or debit card, Perfect Money, Web Money, Pocket Pay, Kiwi, FastPay, and Union Pay. To withdraw, you have to submit a request, which is proceeded daily tickets. When a roll request was sent after 17, they will be received and transferred the next working day. They also offer their website in Russian, Portuguese, Chinese, Thai, Lao. To get in touch with them, you have their address in London, you have their phone number, fax number, email address, their social media, access to live chat, and you can also thank you for watching. Stay tuned.
And that is the basic setup for Pax Forex, which we will be using as our broker. Deal is with these guys, they are fantastic, and I have recommended them, but you will have to be a member with them to work with us. So, account. You're responsible for opening and closing this, and we will handle the insurance policy. Now, it is not $200 a month. That is what we were going to start off with. It was going to be that, but it is not $200 a month. The price for this is simply $100 a month is the fee for becoming a member with this service. Now, you can just come in and have an account with us and on Forex and benefit that way. But if you want to get the full benefit of it, this is what you want to do. And the reason why is there is so much money to be made with this. This example I have for you here. How much money that we can actually make doing this. Oh, goodness. It was here. Y'all got to forgive me. Like I said, I'm still new to this. Okay. I feel like a dumbass now, but it's all right, guys. Like I said, this is the system that you really want to be in because there is so much to be made in this. We're looking at around a minimum of $400 a month that can be made using this system. And I want to find the list. Here it is. Okay. Now, what are you going to get for your $100 a month? All right. We're looking at a minimum of 20 trades of trade a month. 20 trades a month. That's one a day minimum that we're going to go into. And if we're going in this butterfly trade, situation, the worst case scenario, if you got the absolute worst pricing that we're going to get is around 20 bucks. Okay, so if only one side is good, $20, 20 trades out of the month, that is $400 for the month. Our fee is only $100 for the month, and you will get $300 out of that. Now, that's only if we got 20 of the worst possible things. Now, remember something. We are going to have $46 that we can make on each trade. All right, around $46 is what we can make. And what is $50 really that we're looking for minus the $4 cost. So if we were to get $46 all week long, that's $230. Okay, and that times a month is $920 a month that we're looking at. So anywhere from $920 a month to $400 a month is the price range that this system will garner us, is what we're looking at. Now, remember I said that we were looking to make our price range, excuse me, our insurance around 25 pips. The way that we have this set up, you can see that during the times of either Tokyo, London, or New York, the average pip range, the average ATR is 76 pips, 114 pips, 92 pips. We have 25 pips of movement all the time in the major pairs. And even if we took out the Forex insurance and only went with the strength of the butterfly position, you got to look at the fact that you are looking at a 66% chance of success just from the structure of the iron butterfly alone. Okay, you have a 66% chance of success just on that structure alone. And what is also great and wonderful is the fact that he's showing, okay, is the fact that if we were to close out, for instance, if we were to close out at $8 and we've only spent $4, if we closed out at $8, that is a 100% return on investment. Okay, 20 trades a month, $4 a trade is only $80 that you have spent putting this on. 80 bucks. But if $46 is what we can make on each trade, just 2 trades is $92. So we could lose 18 out of 20 and still make a profit. Ouch. Forex insurance backing it up. So as you can see, we have a tremendous amount of profit to be made, and the risks have been modified to where we're looking at risk. I don't want to put a number on that because I don't want anyone to come in and say, well, hey, you told me this, you told me that. But you can do the math for yourself and see that our trading system is powerful by itself without insurance. But adding Forex to the iron butterfly position makes it almost example to make money. I have trade after trade after trade that we back tested and live tested that has produced profit, and we can do this for you as well. So I'm going to wrap it up here with this. I really want to thank everybody for taking the time to listen to my ramblings here, and I hope that you have found this platform insurance trading system something that you would love to do. And even if Nadex and this is too complicated for you, or you don't want to do it, or for whatever reason, you can still simply open up a Pax Forex account to us and benefit in that way. I want to thank you all so much for your time and listening to what we have to do. And please come back anytime to our website, Facebook page, our webpage, and we will have all kinds of interesting stuff on here. And guys, love you. Thank you. There's one last thing. It's not the money that I'm after. It is the freedom to live the life the way that I want to at this business, and you all who have joined me have provided. I want to thank all the people from 7 countries that are part of strategic trading right now. United States, Canada, Great Britain, South Africa, Morocco, Spain. I want to thank all of the people all over the world that have become part of strategic trading. And to you guys and girls, ladies who are coming on board with us after seeing this here, hey, you couldn't make a better choice. Y'all have a wonderful day. Let's make some money. Talk to you later.